Now we will move on to the next phase of our practical session, that is how to prepare a statement showing working capital requirements. So what are the different heads required while preparing the statement? That is given in the format. I have already given that format in PowerPoints. So in that format, what are the different things required? So what is meant by working capital? It is the difference between current assets and current liabilities. So likely the first item on the statement is that the statement will be having one particular column, one inner amount column and outer amount column. And in the particular column, it is given current assets. First, we will start with current assets. What are the different current assets with us? Here also, the first one is stock of raw material. Second one is stock of work in progress. This work in progress can be divided into three. That is work in progress of raw material, work in progress of finished goods, work in progress of direct labor, and work in progress of overheads. So the first head is stock of raw materials, second head is work in progress. It will be of three heads, that is raw material, direct labor and overheads. The third heading will be finished goods. The finished goods will also be in three heads, that is raw material, labor and overheads. So three items are over. Next item is debtors. As usual, debtors. Then the fifth item is payment in advance. If any payment made by the company or by the organization in advance, that will be shown. Then balance of cash required to meet the day-to-day expenses. That is the sixth heading, and the seventh head is any others. So once again I will explain. Stock of raw material, stock of work in progress of three heads, material, labor and overheads, stock of finished goods of three heads, material, labor and overheads, then debtors, then it is coming payment in advance, then balance of cash and any other. Okay. So all these together, the total will be coming as total current assets. Then we will take into account the current liabilities. What are the different current liabilities with us? The first one is creditors. Second one is lag in payment of expenses. What is meant by lag in payment of expenses? All those outstanding expenses which are to be paid by the company. That is lag in payment of expenses, or we can say outstanding expenses. Then third one is others, if any. So we got the total of current liabilities also. So the first heading is A, current assets, the total of it, and B, current liabilities, the total of it. The next heading is working capital, that is A minus B, current assets minus current liabilities. We will get the gross working capital. To this we will add provision or margin for contingencies. Always a certain percentage of the working capital will be kept as contingency requirement or margin requirement. So if the working capital is coming 2 lakh, 10% of it. 10% of it means 20,000 rupees. We will keep as provision for contingencies. It will be added to that. So 2 lakh plus 20,000, our total working capital requirements or net working capital requirements will be 2 lakh 20,000. Okay, understood. So this is the format for preparing statement showing working capital requirements. Now we will have problems concerned with these statements regarding preparation of working capital requirements. We will go to the third problem. That is, it's a problem concerned with calculation of working capital requirements. See the problem. In the problem it is given sales at 3 months credit 40 lakh, raw material 12 lakh, wages paid average time lag 15 days, manufacturing expenses paid 1 month in arrear, administration expenses paid 1 month in arrear, and sales promotion expenses payable half yearly in advance. The company enjoys 1 month credit from the suppliers of raw materials and maintains a 2-month stock of raw material and 1.5 month stock of finished goods. So the company is maintaining, this is the first point which is required. That is, the company maintains a 2-month stock of raw materials. Company is maintaining raw material in stock for 2 months. So while preparing this particular statement, the first item is stock of raw materials. So we will first look into the details of stock of raw material. So first item is current assets, then we will write stock of raw material. In that stock of raw material, we will take what is the cost of raw material? 12 lakh. 12 lakh it is given. 12 lakh into how many months the stock, the raw material will be in stock? 2 months. The proportionate amount we will take. So 12 lakh into 2 by 12. That is the stock of raw material. 2 months only it is in stock. So 2 months proportionate amount of raw materials. That is 12 lakh into 2 by 12. That is first item. And second item is work in progress in our statement, but no item regarding work in progress is given. It is given only stock of finished goods. So we will move on to the third item, that is stock of finished goods. What is the amount of finished goods? You see what is the amount of finished goods given. It is not given, so we will have to find out that. How we will find out finished goods? How we will find out? That is the cost of goods sold. Cost of goods sold. So it is given, assuming a 10% margin, find out the working capital requirements. So first we will have to do we will have to work out the amount of cost of goods sold. How we will find out the amount of cost of goods sold? So many times we have explained it in ratio analysis and all. From sales, if we are deducting the gross profit, we will get cost of goods sold. So what is the amount of sales? 40 lakh. Okay. So working note we have to give sales 40 lakh. From that we have to deduct what we have to deduct 20%, 10% margin. So less gross profit, 10%. 10%, not 10% margin. How much is the profit on sales it is given? How much it is given? Oh, on the top it is given a gross profit of 20% on sales. So from 40 lakh you deduct 20% profit. So you will get 32 lakh. Understood? So before doing the problem, first you find out the cost of goods sold. That is 40 lakh is the sales. From that you deduct the gross profit of 20%, that is 8 lakh. Then you will get 32 lakh is the cost of goods sold. Now we can start. So we have already gone through stock of raw materials, that is 12 lakh into 2 by 12. Now we can see finished goods. Finished goods is 32 lakh. Now we got 32 lakh. Always finished goods will be calculated on cost of goods sold. It's a rule. Cost of goods sold only we will find out the percentage of finished goods. So it is given 32 lakh. So 32 lakh into how many months it has been kept? 1.5 months stock of finished goods. So 1.5 months means 1.5 divided by 12. So stock of finished goods, always it is calculated on cost of goods sold. Work in progress is also calculated on cost of goods sold. Here it is not mentioned about work in progress. So we are moving directly to finished goods. So 32 lakh into 1.5 divided by 12. So it is coming 4 lakh. You can refer the PowerPoint. Then the third one is debtors. Debtors. Sales at 3 months credit. It is given 40 lakh. So, but the cost of goods sold is how much only? It is also calculated on cost of goods sold. That is 32 lakh into how much time it has been given. The company enjoys 1 month credit from the suppliers of raw materials. Maintains a 2 month stock of raw materials, 1.5 months finished goods. The cash balance required is 1 lakh. That is given, but at the beginning it is given sales at 3 months credit. So the credit period for the debtors is 3 months. So debtors are also calculated on cost of goods sold. So 32 lakh into 3 by 12. That is 8 lakh. Okay. Now the heading is debtors over. Now the heading is any prepaid expenses. prepaid expenses, it is given. Sales promotion expenses payable half yearly in advance, 2 lakh. That is sales promotion, out of sales promotion expenses, half yearly period is in advance. So 2 lakh is the total amount, half year period means 1 lakh. So 1 lakh is sales promotion expenses paid in advance. So that is also taken. Then any cash which is required for day-to-day expenses, whether it is mentioned or not, it is mentioned. The cash balance is maintained at 1 lakh. So 1 lakh cash balance is required. So you take the total of it, you will get total current assets. Once again I will explain. Stock of raw materials calculated on raw material purchase for 2 months. Stock of finished goods calculated on cost of goods sold for 1.5 months. Debtors, the collection period calculated on cost of goods sold for 3 months. Prepaid sales promotion expenses half of the amount, and cash balance as required given 1 lakh. So the total current assets is coming 16 lakh. 16 lakh it has come. Now we can go through the current liabilities. Current liabilities, the first one is creditors. Creditors, always it is calculated on raw material purchased. So how much is the raw material purchased? 12 lakh. And they are giving us 1 month credit. So 12 lakh into 1 by 12. The sentence is the company enjoys 1 month credit from the suppliers of raw materials. Our suppliers are giving us 1 month credit. So 12 lakh into 1 by 12 creditors. Then creditors for wages and creditors for administrative expenses, creditors for manufacturing expenses. 3 items are there: wages, manufacturing expenses and administrative expenses. See in the question. Wages are paid in 15 days lag. Manufacturing and administration expenses are paid 1 month in arrears. So these are the outstanding expenses made by the firm. That also we'll have to find out. So wages. Wages amount is 9,60,000 into 15 by 15. 15 means what? Half a month it is. So 0.5 by 12. 0.5 by 12. Then manufacturing expenses 1 month in arrears, 12 lakh into 1 by 12. Then administration expenses 4,80,000 into 1 by 12. So it is all the 3 is over. So all the current liabilities are over. You take the total of current liabilities. It is coming as 2,80,000. Okay. So current assets total is 16 lakh and current liabilities total is 2,80,000. And now we have to find out the gross working capital. Or we can say net working capital, that is current assets minus current liabilities. So 16 lakh minus 2,80,000, we are getting 13,20,000 as our net working capital. On this, 10% provision for margin is to be made. So add 10% of it, that is 1,32,000. 10% of 13,20,000, that is 1,32,000. So the total working capital requirement is 14,52,000. 14,52,000. So the points to be remembered is that raw material stock, always it is considered on what? Raw material purchased. Stock of finished goods on cost of goods sold. Stock of work in progress also on cost of goods sold. Debtors also on cost of goods sold. Creditors are always calculated on purchases, and other expenses outstanding will be added as current liability. The difference between current asset and current liability is the net working capital. On this amount we have to consider a margin. So everything is over. So the total working capital required for the third problem, that is 14,52,000.